Hello and welcome to Admiral's half-year results video. I'm David Stevens, Admiral's CEO, and with me today are Christina Nestares, the CEO of the UK insurance operation, and Geraint Jones, Admiral's CFO.
David, how was the first half of 2018?
We're very pleased with how it's gone so far. It's been a year where the business continues to grow rapidly. We've got 750,000 more customers than we had at this point a year ago. And some businesses are growing even more substantially. Household up another 40%, which is splendid. And international insurance, 17% growth in the number of policyholders. And what's more, for the first time, if you look at our European insurance operations, Italy, Spain and France combined, we actually made a profit, which is a great result, and congratulations to those teams.
Geraint, as David said, a good result for the first half of the year. What are the highlights for you?
I would point to three things, I think. Firstly, the group result for the first half was up by nearly 10% on the first half of 2017. It was a record pre-tax profit for a half year, which is great news. I'd also point to the international insurance result, like David said. Basically improved from a 10 million loss in the first half of 2017 to basically break even in the first half of 18. Small profit in Europe, offsetting a small loss in the US, which is great progress, half year on half year, I think, whilst growing customers by nearly 20%, which is, I think, a great result. And the UK insurance result is the biggest part of the group. The profit was up by about 10%, record profit for a half year, whilst adding significant amounts of customers. So, all in all, a very solid set of results, I think, for the first half.
And what does this mean for the dividend?
I'll probably give the same answer as I gave 6 months ago and 6 months before that. Our approach to dividends is largely to pay out all the profits that we don't need to keep in the company, and that's what we've done this first half. We're paying out more than 95% of our profits again. The dividend is up about 5% to 60 pence per share. That's great news for our shareholders and of course for our staff who are also shareholders.
Thanks. And Christina, Geraint mentioned about the UK motor business and its performance. Can you expand on that a little for us?
It's been a very good first half of the year. We have seen a strong growth in terms of number of customers, in revenues and in profits. We grew our customer base by 13%, and that's a combination of a healthy growth in our car business, but also our van business that we launched just slightly more than a year ago, which is doing very well, and we now have more than 200,000 customers. But during the year, we have been focusing on a number of operational improvements. We have been focusing on making the customer journey easier and better, and this has translated in improving in our customer feedback that we collect through SMS. And something that I think for us is very important is that we can see an improvement in our persistency numbers. So customers join us because they like the price, but they have been staying with us longer than in the past because they like the price, but also because they like the service that we provide. So it's been a very good year, and we will continue focusing on improving the service we give to customers in the future.
And what's happening with household in the UK?
Well, as David pointed out, it has seen a very phenomenal growth, more than 42%. We have grown the number of customers, and we now underwrite about 800,000 customers in the UK. It's been a good year in terms of our ability to continue having an advantage in our expense ratio. However, we have suffered. So I hope a lot of the people in the country enjoy the snow that we had, but that has also impacted our profitability. And I would also like to mention travel, which is the latest product that we launched. It has reached about 30,000 customers, but we're learning a lot about this product and delivering a good offer to the customers, increasing the number of products they can buy from us.
David, the international insurance businesses continue to grow. Are you pleased with the performance, and what does the future hold?
Very pleased with the performance. I mentioned that the European insurance operations collectively have started to make money, and that's really important. And I think that's the beginning of an evolution that could be very positive. I see a virtuous circle. That one of the big things that drove that improvement was falling expense ratios. And as these businesses grow, they get more economies of scale. That feeds into the expense ratio. It also feeds into the data that lets us price better and better. Italy is our most important market, and prices have started to turn upwards there. So there's a short-term momentum that's very positive on that one as well. On the other side of the Atlantic, Elephant, our US insurance operation, is reaping the rewards of its change in strategy last year, where I talked to our investors about focus on persistency, and that's coming through strongly in the 2018 numbers. Still a way to go before it makes money, but it's a lot closer than it was even a year ago. So very good.
Thanks, David. And turning to price comparison, how are those businesses performing?
Well, I'd highlight a couple of points. First of all, I'd highlight Confused. Profits up by over a quarter versus the first half of 2017. That's very strong. And it's the result of lots of little things that have been done by a lot of people at Confused to make the business a better business, and that's great. I'd also highlight the growth of Preminem, our joint venture with Mapfre. I'm wearing the Cactus shirt today to give tribute to the fact that we went on television in Mexico with Rastreator.mx, one of our newest price comparison sites. And we've signed up our first panel members in Turkey as well. So the long-established price comparison sites still making great progress, and the new shoots that we're planting looking very promising for the future.
Geraint, can you give us an update on the group's solvency ratio?
Of course, yeah. Another very similar answer to the one I gave 6 months ago. Position remains very strong. It's around 190% solvency ratio. It's a very strong position for a personal lines insurance company. We're very happy with that position. In the background, we continue to work on our internal model, and we expect to submit an application to the Prudential Regulation Authority in the UK, the PRA, to allow us to use that model to calculate the capital requirement from 2019 onwards. And that is making good progress.
David, you've previously talked about diversification for the group. Can you give us an update on what's happening?
There's a lot happening. There's two major axes of diversification. We're looking to offer more insurance products to our customers, and Christina talked about the success on van and travel insurance. There will be other products in the next 12 to 18 months to add to those. But the biggest single diversification at the moment is beyond insurance into lending, and that's had a very good first half in 2018. We've written a lot more business than we anticipated in a very cautious way, and it's encouraged us about the size of the opportunity. Inevitably, there's some investment required. We lost about 6 million, and that's a reflection of the fact that the costs tend to be front-loaded when you're doing a lending operation. But so far so good.
And to finish, from each of you, could you share what makes you most proud the first half of the year?
Yes, for me it's very clear. We came number 3 as the best company to work for in the UK, and I'm particularly proud because we have been part of this list since the beginning for about 20 years. So we grew the number of customers, our staff is happy, and we have employed about 1,000 more people in South Wales in this past year. So all great achievements for our staff, and it's thanks to them that we managed to get these great results.
Good one. I would say that aside from being named Group CEO in the Spanish press last week, which was very nice, I would say the big improvement in the international insurance segment result, which made a loss of £10 million in the first half of 2017 and basically broke even in the first half of 2018. So a big change there, massive improvement in the underlying metrics and really good progress from those businesses. That would be mine.
Yeah. I would say I think we've got the balance pretty much right in terms of jam today versus jam tomorrow. So our shareholders and all our staff practically are shareholders are seeing a substantial growth in profits and dividends. That's jam today. But jam tomorrow, we're also investing in businesses which are growing rapidly and which will have the potential to maintain that momentum on profit and dividends over the next 5-10 years. So a strong first half of 2018, and we'd just like to finish by saying thank you to our shareholders for supporting us over the last 6 months, but thank you particularly for our staff for all the energy and creativity and effort they put in delivering these results. Thank you very much.
Thank you.
Thank you.